Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. KYC show is the OG KYC show and the most loved one as well. But let's look at the company which would be in focus today, and I'll be giving you some hints about it. And remember, there's a lot of issues regarding the AI and software company, so we'll definitely be focusing on that. It's a BFSI focused software company. That's the first hint I'm giving you. Let's give you the second hint as well. It manages $15 trillion worth of solutions of transactions on a yearly basis. It seems very big. Let's see what else is there in store when it comes to the hints. And interestingly, it's backed by White Oak Capital. Roughly 1.38% stake is there from this house. But it has been a disappointment for the investors, this stock itself. And looking at the stock, it's down 32% from 2025 highs as well. And that's where the key concerns come in. But enough of the hints. And the name of this company, remember, it's a mid-cap or a small-cap kind of an IT-related company. And the company in focus is Nucleus Software. This is the company which we'll talk about. And why are we calling this company? That's another important reason for it. And the first reason for this is, of course, the Q3 numbers. They haven't been very strong. And that is where we see some execution challenges are there. Will these execution challenges continue going ahead? That's one important question to be asked. The second one is the West Asia business. That has been impacted. The Middle East I'm talking about, the Q3 numbers have gone bad here. That's the key concerns coming in the street. And the biggest question and why we are calling this company is this. Is AI a threat or an opportunity for Nucleus Software? Because a lot of AI changes are happening and each day larger institutional stocks globally also are cracking. So we need to understand their business model and moat in this space. What's the client confidence and demand trend? This is a very important question. It is primal, but it's very much important for an IT related company, be it product or service. And the margin guidance ahead. The margins have been under pressure for this company if you compare its history. So let's see whether this margin pressure will bottom out or not. And on the show will be Ashok Kumar Bhura. He's the CFO of Nucleus Software Exports, where he'll give us the entire perception about the company and what else ticks or what else doesn't tick when it comes to the threat from AI. So AI is going to be a very important discussion in KYC, and that's why I've got his company, be it a SaaS or CPaaS. All the players have seen a big re-rating, or you could say a de-rating coming in this sector, and there might be an impact in the stock as well. About the company, this was incorporated in January 1989, and of course they have survived a lot of cycles. This includes dot-com boom as well. Financial inclusion in digital transformation, that is the main mantra for the company. It's located in Noida, and also the company as FY25 PAT that stood at roughly 163 odd crore rupees. These are the numbers which I'll again repeat to you when we do the KYC ratings. They are into digital lending, transactional banking software. So it's very concentrated, their product portfolio, and they have partnership with the BFSI space with 50 plus countries. That's very much important. And the future is definitely going to be on AI and AI enablement. These are the numbers which they are focusing on, and 200 plus clients are also there. AI, ML, API-led cloud-ready platforms. AI, ML is of course your artificial intelligence, machine learning, and API-led movement is also very much important. So they provide the base of what you see on a banking app, or if you're a B2B customer, what the bank sees. So the backbone is provided by this company. There are these key products also which would be in focus, and now the word has started coming in, AI-led enablement programs. That's something which we'll be watching out for. They have licenses also. That's a way of earning for these IT companies when they make these products. That's why it's called a product-based company for the softwares. This also includes FinnAxia. This is also related to the banking-related products, and basically I'm walking you through a backbone of how a banking IT system works, and this is what we would be looking at. These are the overall other products coming in which would be in focus. Also, apart from these other products, this includes cloud migration related products also, but the revenue contribution, that is 86% coming in for the product. So it is a product-based company, and remember, a product-based company has more agility and they can move to AI or AI enablement services also. So that'll be very much important to ask the management is what's the timeline for it, because the entire world is running so fast on capex in AI. Will the Indian companies be left behind, or is there something to come up? Also, the revenue mix, this is the overall revenue mix which you would be focusing on. But now let's move on to the rating parameters. We spoke about the company, what it does, but in our KYC show, we have 8 rating parameters where we judge the company. Of course, numbers are the most important thing. That's why I've kept it at the number 1. Income statement, balance sheet, cash flow. This provides you the basic fundamentals to judge a company. Then, of course, we go into the return ratios. Is it good for the investors? Also, the shareholding pattern. Is there any movement of institutional ownership happening? DIs, FIs, you name that. Street cred. 1 month, 6 month, or even 5-year basis, has this company made money for the investors? That's also some, or most of the people in the ecosystem do look for it. And if it hasn't, people check the valuations. Is there a value emerging? But that has to sustain, and that can only sustain if the outlook is good, or if the surrounding outlook, especially with the AI threat coming in the software or even the product business, what happens next? That's the biggest question we are asking. And of course, our conversation will be a lot on the AI front, so do stay tuned. Also, let's look at the first rating parameter where we judge the company. And remember the income statement, there are 2 parts to it. These are 3-year CAGR numbers. They look strong. Revenue has been 19% growth coming in. But looking at the bottom line numbers, the operational numbers, they have also done really well. But the concern starts coming in when I saw the Q3 numbers. That's where the issues were definitely there, and sequentially there wasn't much growth coming in, and even the PAT number had gone into the negative. This is of course because of the labor cost impact which most of the IT companies have come up with. Apart from that, there has been a decent growth when it comes to the operational profits of it. So net, it's not very great, but I could say the concern remains is the margin front. That is where my concern lies. Around it was enjoying 15% plus average margins. Now it's dipped to the 13.1% mark. Now, will this bottom out? That is something we'll be asking Yash. But margins, it has been a bummer. But net, we can say it's a neutral rating when it comes to the overall income statement. Let's talk about the balance sheet. Balance sheet is very much important. Generally, when a product-based company their balance sheet is decent, they always have cash balances. Let's say, oh yes, I was right, the cash balances are up. Now, what happens with this cash balance? Will it go into AI enablement services, or generally the Indian companies come out with their buybacks or dividend? That's what we'll be asking the management. What happens with the cash? But net, it's a decent balance sheet. There's nothing much to be concerned about, and there isn't any much borrowings as such. That's the model of it. So balance sheet also, I would be giving this a neutral rating. Let's talk about the cash flows. For the numbers, the income statement, the balance sheet was a neutral rating, but cash flows matters a lot, and there might be some seasonality element impacting these companies also. But let's see how things are moving. The cash flow to PAT conversion is still decent, around 93%. PAT has been increasing, that is showing a good strength. But the net cash flows, they haven't moved much. That's where a little bit of concern comes in. And it's largely, it's near that, that 10 crore mark. So we'll be looking at these numbers. But net, even the operational cash flow, that has dipped to around 151 crore rupees from FY24 to FY25. And decent set of numbers coming in the 9-month numbers also. So it's a neutral rating when it comes to the cash flow segment also. But the return ratios, generally you should demand something above the 15% mark, and that's what we have seen happening here. And it has been in a very small range, it's between this 19 to 22%. That's the range coming in. And as of now, it is still stable. And because of the stability, I have given the ROC numbers, the return on capital employed numbers, also an equal rating. So that's pretty much strong. And the ROE numbers also show the same picture which we had shown in the ROCE numbers also. The story doesn't change. And because of that, I still keep my view a neutral rating when it comes to the return ratios. Now let's talk about shareholding. Shareholding is also very much important. Promoters have not moved an inch when it comes to the shareholding pattern. But let's look at how FIs have played out, from March 24, and DIs also, that was around 2% odd. Let's see how it has moved around. It has dipped a bit and again slightly come back, but it is stable. It's still around 5% when it comes to the FIs, and the DIs also, they have maintained that. Public has also maintained that. So there hasn't been a major change in shareholding or a move from the promoters as well. So that's why, to keep it fair, I have given this also a neutral rating. But street cred is very much important. That's where the investors, the stakeholders see KYC to give you the entire picture. Has the stock made money for you or not? Well, for the last 1 month, it has been flat. Technically also, it's suggesting that on a monthly basis, it is on a flat level. 6 months, stock is down 9%. That's where the concern starts coming in. And the year to date also, the stock is down 2%. I had mentioned you from 2025 highs, stock is down more than 30%. Let's see, 5 years, if you're a long-term shareholder, have you made money? That is something which we'll be watching out for. And for the last 5 years, it's just 66%. So that's of course a concern, because the other players in the IT space, they have done much better than that. Even the Nifty IT index is something which we'll be watching out for. But net, it has been a dismal performance when it comes to the shareholding return. And because of that, I will be giving this a strong thumbs down when it comes to the street cred. But let's talk about valuations. Because the stock prices fall down, the valuation turns attractive also. That is the definition which we learn theoretically. But is it important practically also not? That's the question we'll answer over here. We compare that with Orion Pro and Newgen Software Solutions. Largely, you see there is a valuation gap. Are they commanding premium, or is the company coming in trading, or it's a trading at a discount? That's the question we are asking. And it's still not concerning that why this company cannot have the valuation in the early 20s, which their other peers are having. That means net there has been a derating in the sector also. Most of these valuations have come down from the 40 plus, which we had seen earlier in the 2004, 2024 and 2023. But net, just because it's cheaper than its peers, not I'm saying that the industry has not derated, still it's a neutral rating when it comes to the valuations for Nucleus Software. But let's talk about the outlook. That's where the concern lies. The Q3 statements which we saw from the company, also the AI related products the company is focusing on, but the question is, what are the timelines for it? Is AI actually a very big threat for the product based companies? That's the biggest question. And the management commentary also doesn't seem that convincing, especially in the short term or the medium term basis. They are focusing on safeguarding the profitability. That's a conservative statement coming in. And also a dynamic operating environment is there. That means we actually don't know what's going to happen, and that is the concern or the big question mark. Because AI is here, how much replacement happens? Will the client inquiries come down? Will something be done in a very cheaper manner earlier, which used to be done at an expensive manner for the Indian exporters in the IT space? That's the big question. So industry is witnessing a very big change, and that's why we have got this company in KYC to understand, is it or not? So it's a strong thumbs down when it comes to the outlook. And remember, this is just for the medium term and short term. The long term, every company says it's a great outlook. So let's focus on the facts, and let's give you the final ratings also for KYC. And let's just come over here and I'll explain you why this has been done. And especially with the company here, major returns haven't come in for the investors. Largely neutral ratings coming in, be it income statement, balance sheet, cash flow and return ratios, though the return ratios are on the higher side. Street cred is the concern because the returns haven't come in, and the outlook, especially with the AI coming in, that is where the SaaS companies, the software companies, there is some question coming in. Will they become a commodity? Will this be a more de-rating coming in the industry? Will the valuations come down? Lot of questions coming in for the viewers who tune into KYC. And net, the total KYC rating for Nucleus Software I have given is 3 out of 8. So that is the concern also coming in this industry specific move. But joining us would be Ashok Kumar Bhura. He's the CFO at Nucleus Software, and he has a very strong experience also. He was associated with Bharti Airtel for the 18 years as well. So thanks a lot for that interesting introduction coming in. And Ashok, hi, this is Sharad here. Hope everything is well. The Q3 numbers also came in. But Ashok, I would like to start with the industry specific question. AI has come in. It's created a panic for product, SaaS, Indian players or even global players. What is the ground reality? If you could just explain us that.
So we are into we are a product company, and we are closely associated serving the banking industry and NBFC industry. And as you know, that industry is based on precision. While yes, at this point in time, AI is very hot, and everybody is talking about AI and what they are doing about AI. We are also extremely keenly watching this space, what is happening in AI, and how we can adopt quickly in our methodologies. We are experimenting on a lot of stuff on AI front and doing few pilots, and we are getting success there as well. The thing is that we don't want to rush. We are closely watching. We are interacting very closely with our customers. We are understanding their needs and what they are anticipating from us. And we want to build a very robust system. We involve AI, which can help our customer to serve their customer better, bring the operational efficiency in place, reduce cost of service, and obviously, in the process, we should also be able to reduce our costs as well. We are also adopting AI in our day-to-day work. A long plan has been drawn, a lot of discussions are happening, and that is where I would leave at this point in time. That is what we are focusing at this point in time on AI. So we are keenly watching. We are not behind. We are experimenting a lot. We are putting a lot of I would say efforts. We have recently getting into the strategic partnerships as well, which we'll looking forward, and wherever required, we will get into that as well.
Interesting on that, and of course, it's a work in progress for your company and most of the Indian companies as well. Of course, the
Right.
Indian AI Summit will be also coming in. Maybe we get interesting news flows from there as well. But coming back to the company, the Q3 performance, look at, there was an impact coming in. Of course, the labor code impact was there. The Middle Eastern business impact was there. How do you see the Q3 impact of the numbers and your outlook for Q4 going ahead?
So if you see, our revenue has more or less has been range bound for last few quarters, ranging between this 200 to 220 crores. That is where we are hovering around. And going forward, I have a very strong outlook with respect to revenues. If you see, there are a lot of changes which we are doing internally. We have recently, CBO has joined us from Google, who will be taking the strategy forward. As I said in my last statement, we are into strategic partnership. We are looking forward to that. It's not only about India. We are looking for those strategic partnerships across the globe. And we have long-standing customers with us, almost 10 years, 12 years, 15 years with us, and even more. And we are getting momentum on that side. Our existing customer base is rock solid. We are getting ground on acquiring new customers also. Yes, we are selective on getting those customers as well, as we look forward for profitability and sustainability for our business.
And
So
Ashok,
overall, I am very
right.
excited, and keeping in view this AI thing also coming up, the outlook is extremely positive with the changes we have done recently in our organization.
Ashok, just get into the perspective of the customer, the demand, and how's the client confidence and the demand trends looking like? We know like the year is starting right now. There will be some contracts getting renewed, the larger players would be coming in. Give us a flavor
Yes.
of that.
So, while I will not talk specific about numbers, but all I can say is it is looking extremely positive, and it is on the growing trajectory, much better than what we have seen in past. We are on the continued path of growth in India and globally as well. There are a lot of customer traction which we are seeing. A lot of cases where we are a preferred partner. That is what we are seeing. There are a lot of deals which are on the verge of closure. While I can't put a number on that particular thing, but I can say that the things are extremely positive from future subsequent quarter perspective.
And Ashok, margins are a concern. I'm just seeing the last 4 to 5 years, the margins used to be on the higher side. Now it's around that 13% mark. So by when we can see the margins, bottoming out and, the up move starting, or will it take a couple of more quarters?
I feel it will take a couple of more quarters per se, because if you see, we have been investing heavily into research and that stuff which we don't capitalize, which we charge off to our P&L, and that is where you see a little pressure on the margins, which continues. I think for few more quarters it will continue, because as we continue investing in AI landscape, obviously that will also continue in that fashion. While results are there to reap, but I think we will have to wait for maybe 2-3 quarters more. We have started seeing results of green shoots for the investment we have made in recent past, in terms of the recent offering which we have launched, our newest version, which keeps AI embedded as a offering. There are a lot of new stuff which we have incorporated post the feedback which we have received from the customer, our close coordination. And if you see on overall basis, our net promoter score has also increased. That will also give us a boost in terms of referenceability and getting new contracts and foot on different fields. We are exploring multiple territories in foreign land, based on these referenceabilities.
Ashok, there is still, after the investments which you had mentioned, there's still a sizable cash balance also coming in.
Is it fine now?
And of course, we'll get Ashok also into it. Yes, welcome back, Ashok. So basically, the cash balance, that's still on the heavier side. As per my analysis, I saw the annual report also. Generally, a company of your stature either comes up with a buyback or a dividend, and now you're actually investing in the AI and your expansion plans. So this capital, any kind of capex plan you're expecting, not capex, but like investment plan for your company for 2026, any funds are earmarked for that?
The strategy for 2026-27 is still underway. We are meeting, and we'll set up the tone for the next year. All I can say is AI is moving very fast, and there will be an urgency at our end also at some point in time, where we would have to invest a lot. So we would like to keep cash ready, where we see some opportunity to invest or partner with somebody or any other incumbent. So that is where I feel the cash will be required.
All right, that means the cash deployment is not going to be for buybacks or dividends, but on the investments, especially which AI segment. That's what Ashok has stated, and the 2026-2027 outlook has not been released by the company, but a flavor is coming in from Ashok that AI investments will be important. But let's talk about the geographies also. The Middle East is something which has been a concern, and this impact or the downtick coming in the performance of this geography, will it continue or slip into the fourth quarter as well, or will that recover?
No, so it's going to recover, and you will see a strong trajectory, especially on that geography. It has been under pressure for quite some time, but I think the time has come, and we are seeing the uptick from this quarter.
All right. All right. Thanks a lot, Ashok, for that. An important statement coming in is that AI investment would be very much important, but still, it's a wait and watch mode when it comes to how the developments are happening and how India's software, SaaS product, you name it, how the industry will change and evolve. Thank you very much, Ashok, for giving your time and giving us the entire picture and clearing a lot of doubts which were there in companies like your and AI which comes in. Thanks a lot and best of luck for the future.
Thank you. Thank you.
So, of course, interesting commentary coming from the management of Nucleus Software, and they have mentioned that AI investment would be important, but that doesn't mean that the customers or the demand trends have come down. But of course, the street takes it the otherwise. That's all, folks, for KYC. Stay tuned to NDTV Profit.